Most traders sell randomly, sometimes too early because they're scared, or they're too late to sell a stock because of their greed and watch their open profits disappear. The problem? They have no system. We buy the same stocks, yet the outcomes can be very different. You can buy the right stocks at the right time, but how you manage them makes all the difference. That is why in this session, I'll be breaking down trade management into three simple step process. Hi, I am Kavish, and in this video, we'll be talking about trade management and my three-step process to lock in gains, stay balanced, and let the market do its thing. We divide the entire allocation into three parts. These three parts are three different elements, all of which are structured and have a clear plan of action. The first being emotional sell. Now, emotional sell might sound very negative because we are told that in trading, emotions cannot come in, they cloud your judgment, right? It's absolutely correct. But emotions are inevitable. As humans, as traders, because we have money at stake, our emotions come into play. We cannot fight them. Most traders fight these emotions, but I personally feel that you have to embrace them. If you don't embrace them, in the long run, they'll work against you and your trading. Now, you could ask me that why sell based your emotions? Now, see, sometimes emotions can make you jumpy. They can lead to impulsive decisions that often harm our positions. Now, just imagine you are in a drawdown and you buy a stock which moves up 10-12%, but you don't have a rule as to what to do. You either sell the entire position or you don't sell and control those emotions. But to avoid this, what you can do is keep a part of your entire position where you can sell whenever you feel uncomfortable. You are in a drawdown, you see a 10-12% gain, keep a small part of the entire position and sell it whenever you feel uncomfortable. No one is going to judge you. This is more about the mindset and it does not have any logic. It is your urge to sell and you are catering to that urge so that it prevents you from taking emotional decisions on the entire position that is left. So, emotions are now a part of your system and it is limited. It is a limited part. You only sell one third of the entire allocation. So, here you are taking all these emotions, you are channeling them into the right direction. You are jumpy, you will take impulsive decisions. This is a fact. Over the term, you will take decisions that may harm a position. So, why not make it a part of your entire system so that you don't feel guilty about it? That is why you keep this one third of the entire allocation so that the remaining two third you can systematically scale out of it. Your emotions are only allowed to sell this one third of the entire allocation and not more than it. So, this helps you keep your emotions in check over the long term. Second comes selling into strength. Now, the goal here is to hold a stock for at least a 20 to 25% up move from where you buy. You cannot think about taking profits before this threshold is achieved. Now, you scale out using ATR multiples. Now, what multiples? 4 to 5 times of ATR percentage from your entry. Now, you can find ATR percentage indicator on TradingView. It is available for free. Now, whatever that ATR percentage number is on the daily scale, you multiply it by 4 or 5. I generally keep it 5. You get a number that is a percentage. So let's assume your ATR percentage is 5. You multiply it by 5, you get 25%. So let's assume you bought a stock at 100 and this 25% mark is 125. So you scale out at 125. Now, a thing to note here is check ATR percentage at end of day on the day of breakout. So whenever you buy a stock, wait for it to close. End of day, see whatever the ATR percentage is, multiply it by 5 and set your partial exit prices. So right on the day you buy it, you know where you have to scale out. So you have a plan of action. Now, use multiples of ATR or 20 to 25% move, whichever is higher. Sometimes there might be a stock which has a ATR percentage of 4 or 3. So when you multiply 3 by 5, so that gives you 15%. So 15% is less than 20 or 25% move. So we kept a threshold initially, which we even spoke about, that is 20 to 25% up move before thinking of taking profits. So at that point, your threshold is 20 to 25% move. So whichever is higher, you prefer that. Now, why do we sell into strength? See, the goal here is to lock in gains. See, as the strong is still strong, you have to ensure that you don't give back gains, you don't give back profits. So you lock in your gains. What this does is this keeps your equity curve at highs and it also protects your capital. Now, how much should you sell into strength? See, again, we divided our position into three parts. So, one third you keep for selling into strength. So, the first part is entirely based on your emotions. You can sell it anywhere. This is entirely rule based. That is, you use ATR percentage multiples or 20 to 25% of move, whichever is higher to lock in some gains. Now, the third part is selling in weakness. Now, why do we sell in weakness? First, I'd like to share this quote with you. The biggest challenge in trend trading is not identifying the trend, but staying with it. Very difficult to stay with it, to hold it. Because, see, as traders, you never know how far a stock can run. That is the reason you stay in trend. That is why you keep a part of the position so that you can let the randomness do its thing. So you trail your position using an EMA. I'll tell you which EMA or the trending pivots. I'll show you an example and we'll run through that so that you get an understanding as to how you trail it. Then you have to accept that you will lose some open gains. That is the cost of riding the trend. See, because we don't know how far the stock will run, you have to accept that you will be giving back some gains because the stock will pull back and it will stop you out of the trend, and it will tell you that now the trend is over and it's no longer right to stay in the stock. And see, this approach lets randomness work in your favor. See, there are a lot of random things that happen in the market. We as traders, we are not here to predict anything. We have to stay in trend using EMAs and trending pivots and ride the trend for as long as it is there. So you use a 10 or 20 EMA to trail your position and place mental stops. So you don't use hard stops at trending pivots. So this ensures that you don't lose much of those open gains. Now I'll show you an example as to how we do it. So on the breakout day, your job is to track the ATR percentage. So if the ATR here is 7%, we know we have to keep a track of this number, and end of day only we'll identify whatever the ATR percentage is of that stock. So you bought around this red line and end of day the ATR percentage was 7%. So you multiply it by 5, it gives you a number 35%. Now you only sell a stock whenever it reaches that the threshold of 35%. So on the breakout day, you have this figure of 35% and you know that you will only sell into strength once the 35% mark is hit. Now, in between, right after the breakout day, this stock hit an upper circuit of 20%. So this is where that emotional sell helps you. If you are feeling jumpy, if you feel the urge to sell the stock, you can do it without having the guilt, without cursing yourself that you sold too early. So emotions are now a part of your system. So you may or may not sell it here. I've not written it just because of the fact I don't know if you would have sold it or I would have sold it in real time. So we'll not talk about it. But if you wanted to sell it, you could. But as far as selling into strength is concerned, you will only sell at 35% threshold, and you know that threshold right on the breakout day. Post that, you keep the last one third, that is the remaining one third, to sell into weakness. See, when the stock is trading at a new high and you see it up for 3 consecutive days, you have so many emotions in your mind. You have this urge to sell the stock. That is why you keep that emotional sell. Apart from that, you have no control over the position. You have to let the randomness work in your favor. And the selling into strength is done at the 5 times ATR mark. Post that, you wait for the stock to either close below the 10 EMA or the 20 EMA, or hit the nearest trending pivot. So if it violates the trending pivot, the trade is over. You move out of the entire position. So selling into weakness can be done using a 10 or 20 EMA. Whenever the trending pivot, let's assume this was the trending pivot, and here on this day it closed below the 10 EMA. So you wait for this trending pivot to be breached. Here you place a hard stop, and once it is breached or violated, you are out of the trade. Or if you're using a 20 EMA, so here on this day you are out because this trending pivot is violated. This is how you capture a move of almost 50%, and you have systems for everything. See, you use emotional sell to be in control. You don't know for how long the trend will continue. You don't know for how long the stock will continue in the momentum phase. So you keep that emotional sell to be in control. You sell into strength to book gains, to keep your equity curve at highs. You sell into weakness to ride the trend because no one knows for how long the trend will last. And this is a complete system. This keeps your emotions in check. This keeps you balanced in every situation. You get the best of all worlds: emotional sell, selling into strength, and selling into weakness. If you found this strategy helpful, do hit the like button, subscribe for more trading insights, and drop a comment with how you plan to implement this in your own trading. And let me know on what topics would you like to see more videos on. I'll see you in the next one. Thank you.